Yeah, good morning, everyone. So yesterday again we saw US market moving up, showing a strong traction, and also the Asian markets today morning are quite positive. We had seen in last few days that the Indian market underperformed international market. In last 5 day, the India was negative, whereas the international market had shown quite a strong positiveness. Uh, if you see the if you see the Indian market, whereas which were the market which were outperforming in recent past, say last in 3 months, are now underperforming. If you see in last 3 months, Hong Kong was down by around 3%. But if you see in recent performance, they are up almost in last month by around in last 1 month, Hong Kong is up by almost around 20%, and China is also similar is the case. In last 3 months, China was down by around 6%, but in last 12 month, last 1 month, they are up by 12%. So it's what happening is that movie money is moving from one market to another. That is from Indonesia and India. The money is now moving to Hong Kong and China. So that trend it has pushed the Indian market down, and also we have an event which is creating some nervousness in the market, and that is putting some pressure on the Indian market. What we see that the decline seems largely for the near term seems excessive. So we may see some bounce back in near term. Apart from that, oil has also shown some marginal up move, whereas commodities are marginally up or down, nothing so great. So overall seems we may find some bottom in today's trade and may see some bounce back. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. After a sharp decline yesterday's session, we Nifty trade below the 22,000 and close below that important level. But right now, Nifty trading near the 100 DMA that comes around 21,970, and Nifty if managed to sustain these level, then we expect today's short pullback rally towards 22,040 and 22,100 in upside. And if Nifty fail to cross about this and closing below this weekly close below 21,970, then this pressure to be continued towards 21,700 and below that level. But if Nifty managed to sustain 21,917 above close, and next intraday resistance place around 22,040. If Nifty break that level, then we expect some small pullback rally towards 22,100 and 22,117 upside. Bank Nifty also trading the near the 50 DMA, and yesterday closed that near the 50 DMA. Below that, if Bank Nifty fail to sustain this level, then Bank Nifty extend this fall towards 100 DMA, that's 47,200. And if they manage to sustain the 47,600 level upside, then we expect small pullback towards 48,000 and then 48,400 and upside. So both index trading the crucial level, and if today's weekly close managed to sustain this crucial level, then we expect some pullback. Otherwise, we fail to sustain this important level, then we expect this pressure to be continue in few trading sessions. Fin Nifty also trade below the important support zone, that is comes around 21,270, and yesterday closed that 21,200, and yesterday closed that important level 21,200, and yesterday closed at 21,160 near this below this support zone. The next immediate support place 21,30 and then 20,900, and upside first immediate resistance place around 21,270. If break that level, then we expect further pullback rally towards 21,400. All three index trading near the crucial support zone. If today's session managed to sustain, then we expect some pullback rally. Stock specific, Lodha looks positive in real estate. We already given call. Upside 1200 is the first immediate target. 1100 is a major support for Lodha. Second, SBI card, we given a call in yesterday. In second half, we expect some pullback rally expect in this stock to expect upside 440, 742 and 715 upside. Major support place around 100, 708 and 704 at downside. AU small bank also looks positive at current level. We expect some positive momentum towards upside around 660 and downside major support place around 610. That's it for technical derivative. I can.
Good morning, everyone. So on the derivatives front, as per the OI positions, we are witnessing there was a healthy sell-off in yesterday trading session, breaking down the supportive level which Nifty was managing from last 2 to 3 weeks of trading session. Now, if you look at the data from the OI perspective, the data which is getting shifted on the downside is completely towards the 21,700 will be the base support for the Nifty right now. Below that, directly the switch will be towards the 21,400 level. While on the upper side, we are seeing the 22,000 to 22,200 level. Call Colorado positions got added up yesterday sharply. So once if Nifty manages to get a stable or get a pullback rally to about 22,200 level, and if closing comes above that level, then we might expect the stability to be witnessed in the market, and again the buying will be seen once if Nifty goes and gets a close about 22,200 level. But if Nifty manages to fail the close about 22,200 level, then again we might witness some sell-off pressure in next week of a trading session. So today's weekly closing will be very much important as per the Nifty perspective. While on the PCR front, PCR closed at 0.71 level. So PCR is trading at the lower level and oversold zone. So we might expect some pullback scenario in the today's first half of trading session, which will take PCR towards 0.88 to 0.95 level. At that point of time, we might again see some sell-off pressure. But in the first half of trading session, we might expect some buying because if we look at the PCR data and the OI data, both are indicating towards a pullback front, while FI again sold around 7,000 crore in yesterday trading session. In last 1 week of trading session, we have witnessed that almost 22 to 23,000 crore of FI selling has been witnessed, and we might see some stoppage in this for the next 1 to 2 weeks of 1 to 2 days of trading session. Once if Nifty goes below 21,700 level, then we might witness some sell off majorly from the mid cap small cap front also. While on the stock specific front, counter that looks positive in this session will be M&M and Pidilite looks positive, while on the negative front Muthoot Finance and Asian Paint looks negative in today's trading session. So that's it from derivative front. Thank you.
Good morning. On the results front, yesterday ADF Foods has posted the results and results were improved. Revenue reported 25% YOY growth and overall EBITDA margin reported at 22.3%. ADF Foods operates mainly in two business segments, that is processed food and distribution. Processed food contributes around 83% to the overall revenue, and this particular segment has outperformed in this quarter. It has seen 29% YOY growth in revenue and 27% of EBITDA margin, which has improved from 25.3% of EBITDA margin in the last year same quarter. And distribution segment contributes around 17% to revenue, which has grown by 3.4% on a YOY base, and it has posted 8.2% EBITDA margin. The company has launched several new products during the year. In a press release, the management has guided for 20% revenue growth in FY25. The stock is trading at a PE of 25 times to FY26 EPS, and it looks positive. Orient Electric Limited result was below expectations. Revenue grew by 19.7% on a YY basis. ECD revenue grew by 24.3%, and where the fans has registered the strong growth, and the lighting and switchgear reported growth of 9.1%, led by strong growth in switchgears. International business grew by mid-teens, and the gross margin has increased by 244 basis points to 30.8%. EBITDA margin reported at 3.9%. For the year, EBITDA margin reported at 5.1%, which was largely impacted due to the EPR compliance cost by 2.7%. That was 18.6 crore in Q4. The stock is trading at PE of 26 times to FY26 EPS. Asian Paints Limited posted the results below expectations. Revenue degrew by 0.6% on a YY basis, where decorative business has registered a volume growth of 10% with revenue decline of 1.8%. And the revenue was largely impacted by weak demand conditions and down trading. Also, it has seen price cuts across product categories. Coating business in India registered revenue decline of 0.7%. And industrial business delivered a strong quarter. Automotive coatings business crossed 2,000 crores of mark in the year. Home decor business continued to see gains from synergies with the Beautiful Home Stores, and international business registered improved profitability in Q4. Overall, EBITDA margin reported at 19.4% versus the expectation of 21.3%. The stock is trading at a PE of 43.4 times to FY26 EPS, and the stock was down by 4.4% yesterday. Also, during the year, it has not performed that well, but we are long-term positive on the stock. Alkyl Amines Chemical Limited posted the results above expectations. Revenue degrew by 13.4% on a YY basis. EBITDA margin reported at 19.3% versus the expectation of 17.9%. The stock is trading at a PE of 30.8 times to FY26 EPS and will provide the outlook post today's con call. Yesterday, SRF Limited has hosted the con call, and if we look at the result was marginally below expectations, where revenue degrew by 5.5% and operating margins were reported at 19.9%. On the annual performance, FY24 revenue grew by 12% on a YY basis. EBITDA margin reported at 21%. And company's overall profit degrew by 38% on a YY basis. In FY24, mainly chemical and packaging film business has witnessed the challenging environment, while it has seen the marginal growth in technical textiles business. And the management is bullish on account of its capex, which was commissioned in FY24. It has spent almost 1,700 crore in chemical business and around 1,200 crores on fluorochemical business. In fluorochemicals, being an integrated player, it is mainly focused on the sales of R410A and R32. Company's enhanced R32 capacity is also now commissioned, which is expected to offer incremental volumes during the year. Also, in terms of aluminum foil plant, it has seen slow beginning with the learning curve, where it has fixed the problems in the month of April, and technical process has been streamlined. It expects potential future growth in the business, where it has no competition in the domestic market. Also, in terms of technical textiles, it has seen strong growth a strong growth from belting fabrics as well as polyester industrial yarn. And it has commissioned another capacity of polyester industrial yarn in FY24, and new commissioning of hot lamination machine is expected to help in offering superior products. In terms of AI molecules, the work is going as per the plan, and it is expected to come up with 5 to 6 molecules by FY25 end, where only 2 to 3 molecules are expected to contribute for the FY25 revenue. The management has guided for 26 to 28% of EBITDA margin, and chemical business revenue growth is expected more than 20%. So we are long-term positive on the stock, where the stock is currently trading at 27 times to FY26 EPS. Thank you.
Yeah, good morning. So, Happiest Minds Technologies is acquiring a 100% stake in US-based digital product engineering company. The company is Auris Tech Systems for $8.5 million, approximately 71 crores. So, and this acquisition is expected to be completed by June next month. And just to note, this is the third acquisition the company is making since FY25. In April, it had acquired 2 more companies. So this is in line with the company's vision of becoming a $1 billion company by FY31. And it is expecting to grow at a CAGR of 22% till then every year. So it seems positive for the company. That's all from me. Thank you.
Yeah, apart from this, yesterday State Bank of India came up with the number, and the numbers were all round positive. The company had seen advances growth of around 16%, which is in line with industry, and expected to grow in a similar way in coming year as well, in line with the industry. Apart from that, the asset quality continued to show improvement, and on all account, cost of fund and slippage and all, everything has improved. Company has reported ROA of 1.36%, which is multi-year high. In line for draft guidelines, what company had said that the draft guidelines on project financing and where the company need to make provision, the company will not have much impact of the same, as company hold some floating provision, and as such will not be getting impacted. So overall outlook seems positive. The stock is trading at around 1.6 time EV by EBITDA, adjusted EV by price to book value, adjusted for subsidiary value of around 180 rupees. So outlook for State Bank of India is positive from here. Then another company, that is Suryodaya Small Finance, came up with the numbers, and result has shown improvement both year on year and quarter on quarter. Disbursement had shown good improvement of almost around 31% quarter on quarter and 29% year on year, and maintain its trend of such a high growth performance. Similarly, advances also grew by around 34% year on year and 12.5% quarter on quarter. Though we had seen some marginal corrections in the NIM, that is net interest margin, but that is also what we feel that is likely to stabilize and show stability in the coming quarter. If you remember, in last monthly call, we had recommended this stock, and based on the valuations and high growth. Looking at the high growth, we see that the stock is underpriced. Stock currently is trading at 1.2 time price to adjusted book, but if we compare the similar type of bank companies, they all are trading at 1.6 to 1.8 times. So there is a scope for improvement in valuation of the company, and anyhow, the growth is substantial, over 30% for the company, for the bank. So outlook is positive from here. So that's all from us. And I'll request commodity company to take up.
Yes, sir. Thank you very much. Good morning, everyone. So yesterday we had witnessed gold pricing breaking the range on the upper side, and prices have sustained and closed below above the 71 500 mark. So the momentum is positive, and today also it is opened up 500 odd points up, and one should buy on dips. 72,000, 900 is the level where one can initiate a buy position and maintain a stop loss of 71 700. On upside, it can test 72 300 to 72 500 levels. Silver also, we are expecting prices to test 86,000 on the upside. So buying on corrections, already prices have opened gapped up open, but one should initiate a buy around 84 500 and maintain a stop loss of 83 800. In metals, copper prices are expected to test 868, 870 levels. So if prices are sustaining above 870, then fresh buying might be witnessed. However, for trading purpose, if prices are sustaining below 870, so one can sell around 868 with a small stop loss of 871. Whereas buying on downside is recommended around 850 to 860 levels and maintain a stop loss of 855. Zinc also, we are expecting prices to test 261, 262 levels. So buying around 259 with a stop loss of 257 is recommended. And in crude oil, prices, one should buy on dips. Buying around 6600 is recommended with a stop loss of 6530. And on upside, 6730, 6750 is the level we are eyeing for. Natural gas prices yesterday had witnessed some cool off, but again recovered from the lows of the support at 178 180 mark. And today also the prices are expected to trade higher. So buying around 190 is recommended with a stop loss of 182. On upside, 200, 205 is the level we are eyeing for. So that's it from us. Thank you very much.